Hi, everybody. This is Dan Sheridan. It's Sheridan Risk Management, and I'm going to be on Option Omega Modeling Tool today. And I'm going to look at one of my favorite strategies that I used to like when I was in the trading pits in Chicago, the CBOE for many years, called the time bomb butterfly. And what they are is just cheap speculative shots that you put out there. And I'm going to look at SPX today, which is a $6,800 vehicle. And we're talking like $100 shots. You could do a speculative trade. And to me, they make good sense. These aren't just like trades that are way out of the realm of coming to fruition. But I like these. There's a place for these. I've always liked it. It's the cheapest way that I know to take a good shot. But it's generally the highest yield doing it this way. So let's go over an example. So today we're at 68.15. It's on a Monday. And I am going to look at SPX. We're at 68.14. I want to do a cheap shot. And let's say 4 days out would be Friday. So I'm looking at April 17. And as I look at the market here, as of April 13, if you want to go back and look at a price chart, April 13, 2026, you say, give me a little perspective. Here's the perspective. The last 2 weeks in the market, we've gone up 500 points in the SPX. Dan, say that in English and Spanish. The last 2 weeks, as I speak to you, we've been up 500 points in the index. Dan, how much is that? What are we talking? About 8%. All right. So I'm looking at this, and I'm looking on a Monday, like today, and I'm looking, hey, futures have, we're up from futures that have traded overnight till today. We're up about 70, 80 points. SPX is up a little bit. We're at 68.14. And I'm saying, all right, what's the expected move or standard deviation till Friday? A little over 100 points. All right. Is the market going up? Has it been wanting to go? Yeah. Again, let me say this in 3 languages. We're up 500 points in 2 weeks, 800. So, am I putting much capital? No. Am I putting the same amount of capital that I would put in range-bound trades? No. And again, sizing is so important, right, with these trades. So what am I going to do? I'm going to go here, and I know the expected move is 100 point. What does that mean, Dan? Expected move. That's just one standard deviation. They're saying if we're right now 68.15, there's a 68% probability we'll be up 100, 110 points, whatever it is right here, between now and Friday. So they're looking at a range of basically 67, 6,900, roughly, give or take a few points. So with that in mind, let me structure a trade like that. So just give you an example of what a time bomb butterfly looks like. And the cost, again, we're at 68.15. In this example, I gave you some perspective. I'm going 4 days till Friday. I know what the expected move is. So let's say I even go 70 points, 60, 70 points under where we're at. So we're at 68.15. 100 points should be 67.15. So let's go to let's go to 67.50 or something. Let's just get the ball rolling. So if I go to 67.50, right, which is like a 30 delta, so there's only a 30% probability we'll finish under 67.50. Again, this is where we're at now, 68.15. If I look at the delta of the short put, 30, so that'd take me 67.50, about 65 points under where we're at. So what if I sell 2 of these puppies? All right? Now, then what if I buy my longs 20 points either side of this? So this would be 67.70 and 67 just for an example, 67.30. So if you look here, I'm selling the 30, near a 30 delta. This is 28, two of them. And I'm buying one more out of the money at a 25 delta, but just 20 points out of the money either way. And that's 4 days out. And let me just make sure I've got this right. And if I look at a chart, you can see, here's what's interesting. We're at 68.20. My short strike is 67.50. All right, the expected move, we're looking roughly over the next 4 days, up 100, down 100. That'd get us down to 67.20, down 100. And I'm putting my landing area, which you can put it wherever you want. It's 67.50, down 70. And this is a $6,800 vehicle, and I'm paying $70. But as we get the power of a balanced butterfly, a time-bound butterfly. So I'm planting these. I can put whatever strike I want. I can put multiple here. I can layer these at different places. It's $70. But if you look as we get closer to expiration, I'm going to take us slowly to Friday. All right. And look at the sun start to rise and you feel warmth on your body. Here we go. Tuesday, Wednesday, Thursday. The sun. Here comes, what's that song? Here comes the sun. Was that George Harrison? I don't know. Friday. Look at that. Right? The sun is starting to rise. So on our $80 investment, if we're in the landing area, right? If we're in this landing area by Friday, as Marlon Brando said, you could be a contender. It's a cheap shot. And again, you could have the landing area wherever you'd like it. You say, what do you mean by that? You know, if you want a little closer to where we're at, right? Instead of instead of what if you move it a little closer? So what if I move, instead of in my short strike with us at 68.20, at 67.70, come a little closer to the snake. Let's say I move everything up 67.90, move everything up 20 points, 67.70, 67.50. Now, instead of 80 cents, costs a few dollars more, not much more, kind of like this, or it's 68.20. And my landing area is 67.90. Think about it. It's only 30 points away from the market. So if my airplane by Friday lands $67.50, that's a nice area, right? I could put another one on the upside, right? I could put another one down here, but I have a landing strip of 40 points. Again, cost me $80. In this one, I'm selling the 67.70 in the middle. Is this realistic? What do you mean, is it realistic? Well, let's take a look. I'm selling the 67.70 put. What's the delta? 33. What does that mean? In English, Spanish, and Swahili, a 33 delta. There's only a 33% probability that we're going to finish under the short strike, but there's a 66% probability we'll touch it. We'll go near it. So, is this a reasonable profit area? I think so for a speculative trade. It's $90 on a $6,600 vehicle, right? And again, play the song. What is it? Here comes the sun. Here we go. You ready? Na, na, na. Here comes the sun. Na, na, na. Na, 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 na. Look at that. Boom. Right? Dan, is that the software make a mistake? Is it saying if we're in the landing area here, right? If we're in that landing area, can you make 600% on this if you're in the landing area? Well, you tell me. Yeah. Pay $95. What's my total risk on this, Dan? $95. Right? That's it. What if it goes up? Your risk is 95. So you size it accordingly on spec trades. What am I willing to lose? Now, I could plant another one. We start going up. I could plant another one up here, but that's a different conversation. But anyways, I just want to introduce you to the time bomb butterfly, one of my favorite spec trades. Thanks a lot. Appreciate it.